What's up, y'all? Welcome back to the channel. With a massive recession fears around the corner, there is layoff going on left and right. There is a lot of fear around the inflation. Inflation is record high right now at 8.3% in 2022. It was 7% in 2021. NASDAQ is historically low, 33.42% year to date. As we are in October, you might be wondering where you can park your cash so it does not lose value. More importantly, how you can make your cash work for you. In this video, I'll be sharing one of the great tools as to how you can leverage the rising interest rates. Up until now, you might be hearing interest rates that are rising. It's only not for good. It's for bad and worse, and it'll damage the economy. But I'm going to show you a way or a tool called certificate of deposits. It's going to give you such a peace of mind, and you can park your cash at certain percentage that bank can offer you. It is called APY. So we will be learning certificate of deposit in this video and what it can do for you. More importantly, I'll be showing you how you can earn 4.3% interest rates in this video in next couple of minutes. In return, all I ask you is just to hit the like button and subscribe to the channel. It is a great motivation for me to build more and more personal finance, stock, and mortgage videos and cater the information over back to you. Now, before I go ahead, I just also wanted to ask you, do your own due diligence, because every local bank is different, every product is different, and you want to do your own due diligence because at the end of the day, that's your own money. Now, let's learn about what is a CD, what you can get in terms of the CD calculator that you can verify before you lock up your money. One of the things is you might know that what is a savings account, what is a money market account, but you may or may not know what is a CD. Most importantly, you may not know that how you can earn 4.3% interest rates for a certificate of deposit, which is what precisely I'm going to share in this video. Now, if you don't really know what is a certificate of deposit, a certificate of deposit is a saving product that earns interest on a lump sum fixed period of time, which means you're locking money for the bank and you're telling them for 6 months, 9 months, 12 months, or 18 months, you do not really need that money back. In return, bank will pay you higher interest rates. Now, every bank is different and every term is different, which is why you want to go contact the bank. However, the method that I'm going to show you in this video, you don't really need to get out of your house and you can just get this done over your computer. Now, CD product will earn interest on a lump sum for a fixed period of time, and it will differ from the savings account because the money must remain untouched for the entirely of their term and the risk penalty fees or lost interest. However, you can decide to pay the penalty and take your money back, and then you can make it to use for something else, but then it defeats the purpose of having a CD. So that's the con. Now, CDs usually have higher interest rates than the savings account or money market account as an incentive for the lost liquidity. Almost the consumer financial institution, every consumer financial institutions offer CD, which means it's their local credit union or any local bank or larger banks like Wells Fargo or Bank of America. Although it's up to each bank and which terms that they want to offer and how much higher the interest rates will be compared to the savings and money market product. But one thing you want to clarify and keep in mind as big key takeaways are top paying certificates of deposits pay higher interest rates than the best savings and money market accounts in exchange for leaving the funds on a deposit for a fixed period of time. So the key idea here is you're locking up your money for a fixed period of time. CDs are a safer and more conservative investment product than the stocks and bond. Right now, the stock market is going down, real estate is going down as well, mortgage rates are going up, so it does not really matter. They're also offering lower opportunity for the growth. At the moment, they're offering 4.3% as I just mentioned, and I'll show you how, but in a non-volatile and guaranteed rate of fixed income return. Virtually every bank and credit union and brokerage firm offers a menu of CD option. Now, the CDs that are offered by brokerage firm, it's called brokered CD, and I'll be covering that in more detail later within a couple of minutes in this video. The top nationally available CDs are typically 3 to 5 times higher than the industry average for every term. So shopping around delivers significant gain, and which is what you're doing by verifying the information that I'm sharing in this particular video. Although you lock into a term of duration, when you open a CD, there are options for exiting early should you encounter any emergency or change of plans. Now, if you want to calculate the CD return, you can easily do that. Checking that online, this is the calculator that I'm using from Bankrate. Now, this CD calculator, which is to find out how much interest is earned on a certificate of deposit and or called CD. Just enter a few pieces of information and the CD calculator will give you APY, as the bank calls it, or annual percentage yield, and the ending balance. As you can see on my screen, the initial deposit in this example, let's say it's $10,000. You're putting that money into the certificate of deposit for a period of 2 years, and the APY is 4.3%. Annual percentage yield with 4.30% for a 2-year period of time for an initial deposit of $10,000 will get your ending balance to $10,878.49. In this particular use case or example, your earning is $878.49, whereas the national average that you will be putting that money into your local bank or any nationalized bank, you'll be getting $259.66. Now, I'll be sharing more information as to how you can get 4.3% interest rates within just a minute. But if you want to find out the best interest rates, you can go to NerdWallet and they'll be able to give you some idea. You can go to Investopedia and they'll be also giving you how you can earn the best CD rates, or you can do your own due diligence and go check on Bankrate as well, where you can see that Capital One offers you 3.5% for 5-year term CD, 3.25% APY, annual percentage yield for 1-year term, so on and so forth. But I probably wouldn't put that for 5 years because it's a long period of time and the interest rates is not that high, as you can imagine. However, if you go to any of these sites and if you scroll down, you should be also able to get more information as to how various banks offer this CD rate and what is the best CD rate that you can get. As an example, for 3 months, you should be getting the best interest rate as 3%, the medium interest rate or mid interest rates for 2.4, 2.17%, so on and so forth. As you can see, as you go higher, your interest rate goes higher as well. But then again, this is a credit union that you might not be able to walk in and find out the CD for yourself. The reason why I'm saying that is because it depends upon every local bank, every local credit union, and as the bank gets smaller or the credit union gets smaller, you earn better CD rates. Now, as an example, I'm showing you what you can get today using one of the brokered CD, and I'll be sharing how you can do it yourself. So this is today's date, as you can see, and this is the CD or brokered CD offer from Wells Fargo. Remember, this is not a commercial video or advertisement, or this is not a paid promotion. This is I'm sharing the research and analysis that I've done for myself. Now, with this CD rate, if you put the money in, you will be getting 7/14/2023 with 4% annual percentage yield or APY coupon at the maturity pay frequency. And the coupon maturity date is 7/14/2023. I'm so sorry. Now, in this particular example, you can get 4.3% for the CD that is going to get matured on 4/15/2014, which is 1.5-year CD. The pay frequency is monthly. So, and the maturity date is 15th of April 2024. which is interested at accrual interest date is 10/14/2022, which is when your interest will start kicking in that you want to consider. Now, if you want to find out further information, I'll share with you how you can get it. But before that, I wanted to share what are brokered CDs, and you want to understand that as well. Brokered CDs are the certificate of deposits purchased through the brokerage firm or broker. In this particular example that I shared with you, Fidelity is our broker, which means if you have account with Fidelity or Vanguard or any other brokerage firm, you should be able to find relatively higher rates, APYs for CD, which means more money in the interest for you. Now you want to also understand that they differ, that they are purchased and sold on the secondary market through the brokerage account. So that's not your typical bank. Pros and cons of the broker CDs. I wanted to share one thing with you is the liquidity. Traditional CDs may require to keep the money for the account for a specific period of time, and there are not that many withdrawal opportunities and time periods available with respect to maturity date. But with brokered CD, you're able to sell the CD in the secondary market without a penalty at any time. And once again, it depends upon the situation. So you want to do your own due diligence. The term is the second pro, having a CD as a brokered CD, because typically there are more terms available: 6 months, 9 months, 12 months, 18 months, so on and so forth for the brokered CD than the traditional certificate of deposits. The third thing is the convenience. You can purchase the CD using a bank, you can drive in, you can find this information, you can open an account, so on and so forth. But with the brokered account, you might be able to just do it online using the trading platform or website. And lastly, that you're going to love is the higher interest rates. Broker CD typically carry higher interest rates for those found the banks, but you have to shop around, and sometimes online banks may offer higher yield as well. Now, what are the cons of the brokered CD? There is a high risk. Typically, it's beneficial in most of the situation. However, the liquidity or the brokered CD makes it easier to lose money. So do it accordingly. You want to make sure there is FDIC insured, so on and so forth, other protection. Now, you could potentially lose some of the money if you're trying to sell it before the maturity date. Keeping the CD until the maturity date reduces the risk of losing money on it, because you guaranteed the lockup period and you want to stick to it. Now, second thing is the fees. You should be careful about. However, I'm able to find the fees are zero, which means you're not paying any fee. Though there are no early withdrawal or monthly fees on broker CD, there may be fees for selling them, which can eat into your earnings as well. The third thing is callable. Some broker CDs can be called back before the maturity, which means there is a window of time when the brokerage firm decide that they can pull back the bank before the maturity date. If your CD is called, you'll miss out on the full earning, but at that time you'll be getting your money back. So it's not necessarily a cons for most of the time. And the last one is, it's not always the case that broker CDs carry high interest rates. But in my opinion, I've always seen higher interest rates. Now, the next thing is how you can find it. Here is how you can find it. You can go to fidelity.com if you have an account. If you don't, then you can just verify this as well. You go and click into the news and research tab and click on fixed income, bonds, and CDs. So once you click there, you should be able to find, as I see on my screen, and you can scroll down and it should have yields as the tab open. Now, if you take a look, for 3 months, we are seeing 3.30%. For 9 months, we are seeing 4%. And for 1 year, we are seeing 4.05%. With 2 years, we are seeing 4.35%. Now, this sometimes changes and you want to keep an eye out, because this fills out pretty quickly. As you can imagine, for 1 year, you're getting 4.05%. And if you take a look right here on the best CD rate, for 1 year, you do not really see that high of an interest rate. So you are seeing 3.85% for a local bank, so on and so forth. So if you want to get the CD, you want to keep an eye out. And as an example, if you want to buy a CD for 2 years, 4.35% interest rate is a great interest rate in my personal opinion. And if you want to find out how much money you can make with 4.3% interest rate and for 2 years for a $10,000 of initial deposit, you should be able to calculate using the CD calculator. I hope you liked this video. If you did, hit the like button, subscribe to the channel, and motivate me. I will see you in the next video. Thanks for watching.